You understand the basics of Medicare IRMAA, the surcharge that makes your clients pay more for B and D, but you always calling us for questions about all the little technicalities about IRMAA. So for those of you that are new in the business that definitely don't know this, and those of you that have been working in the Medicare market for years, I'm going to go into some of the technical aspects of Medicare IRMAA. Let's start with a weird outlier, a reverse mortgage. If your client takes out a reverse mortgage, a big sum of money coming in, or just monthly payments, depending on how they structure their reverse mortgage, will that trigger Medicare IRMAA? Is there a potential to increase their taxable income, which increases Medicare IRMAA? No, because a reverse mortgage is categorized as a loan, not as earned income. No problem with Medicare IRMAA. No problem with Social Security if you're also thinking about that side of the house. How about the same thing? You take a loan out of your 401k. Again, a loan will not trigger Medicare IRMAA. A withdrawal from your 401k can trigger both Medicare IRMAA, taxes, actually can trigger a penalty if you take it out too soon prior to 59.5. So let's talk about an IRA, 401k, 403b, 457, any of the types of retirement accounts that the taxes are deferred. When they take money out of those accounts, it will be taxed. If they take it out too soon, it also has a penalty. But let's say they're over 59.5 or they're employing the rule of 55, but let's say that's penalty-free, but it's taxable. So a lot of people say, well, I'm going to appeal Medicare IRMAA because I took $100,000 out to remodel my house. Well, don't waste your time appealing. That's not an appealable event. If you Google the SSA Form 44, it'll show you what's appealable. You got married, you got divorced, you retired, basically, you lost income producing property. For most people, they retired. They no longer had the income at that job. But you will not see a form that says, hey, I sold my house and I realized a $900,000 gain. No, don't waste your time appealing. Tell your clients that will trigger Medicare IRMAA. Let's talk specifically about the sale of a house. So my client bought the house at a $100,000 price. The basis is $100,000. My client now has a house worth $1 million. My client lives in California. So it's a $900,000 gain. Is there a way to avoid Medicare IRMAA? Well, don't sell the house. Don't sell the house. Maybe just rent the house. You could structure the sale of that property. You could sell it on contract and sell it over 5 or 10 years to try to minimize the taxable gain, to try to stay below IRMAA. Most people don't want to do that. They're going to sell the house. They're going to get hit with Medicare IRMAA. And your job is just to explain to them it's recalculated annually. It will only last for 1 year. If you're both drawing Medicare, it will impact both of you if you're married filing your taxes jointly. So you just want to be able to guide them around the problem. There's no way to avoid that problem. Now, if they are selling a house, there is a hefty tax exemption. If I'm single, my exemption is $250,000. If I'm married, double that. $500,000. They have not upped these. They haven't kept pace with inflation, sadly. So they are $250,000 and $500,000 only if I've lived in this house as my primary residence for 2 of the past 5 years. So now your client comes to you and your client's getting remarried. So she was married, got the house in the divorce. Now she's marrying the new guy and he's got a house and she's going to move in with him. A very common scenario. She doesn't need 2 houses. She doesn't want the hassle of renting her house. She's going to sell her house. If it's been her primary residence for 2 of the past years, cool, she gets the exemption. But it's not. She's been living with him for the past 5 years and renting the house. And now they decided they want to get rid of it. No exemption. So a lot more taxable gain. Boom, opportunity to trigger Medicare IRMAA. Again, a lot of times, all you're trying to do is explain to your client what happened and why, and that it's only for 1 year. They're not talking to you in advance and letting you help guide them. Now, a lot of times, I tell them, it's not your accountant's fault necessarily or financial planner's fault because they're not well-versed in Medicare IRMAA. So you were kind of out there on your own and you didn't come to me until there was a problem. So I couldn't help fix it. But if you're going to be a conscientious advisor, this is something you're talking about to your clients in your newsletters, in your social media posts, in your meetings, and educating them so that they know, hey, before I sell this house, before I take money out of my 401k or my IRA, I need to consult the Medicare IRMAA brackets, and maybe I need to talk to you, their Medicare specialist. So There's many, many more things that can trigger Medicare IRMAA. I'm not going to go into all of them, but let's talk about gambling winnings. I'm shocked how many people gamble because I don't gamble. But a lot of people gamble and a lot of people win. Now, they don't let you net out your losses and your wins, which I think is cruel. But if you have a $200,000 loss, but you have an $80,000 win, they're going to tax the $80,000. They don't let you net that out. So my $80,000 win is taxable. It's probably going to trigger IRMAA, and it's not appealable. There's a lot more I could go into talking about things that trigger Medicare IRMAA, an inheritance of an HSA, the inheritance of an IRA or 401k. So just know that you know a little bit about Medicare IRMAA. The easy thing is people are retiring and you've guided them on how to appeal with the fact that they've retired. But there's a lot of other things that might trigger IRMAA that you should be able to give them some advice on. And hopefully you can help your clients avoid triggering the Medicare surcharge. If you learned something, I would appreciate it if you hit the follow button and tune in again next week. I'll teach you more and get you more ready for being a Medicare expert.